Okay, let's unpack this. Picture this. You're right there, about to make a big move, maybe buying a car, getting that apartment, or, landing a job that needs some financial trust. You feel totally ready, you've done the groundwork, and then, bam, denial, application rejected. And the reason, it points back to this thing you didn't quite grasp, maybe didn't even know was a thing, your credit report.
That denial, it's such a shock, right?
Yeah.
And the material we've been looking at really hammers home that your credit report, it's so much more than just a number. It calls it a detailed narrative of your financial life, talks about this kind of surprising, almost hidden power it has.
Right. It's like a story about you, but told with numbers and dates. So our mission for this deep dive, using the sources you shared, is to really break down that story. We want to figure out what a credit report is, why it matters so much, decode all those confusing parts, show you how to spot mistakes, get them fixed, and really how to make this whole thing work for you, not against you.
Yeah, exactly. It's about shifting from, being kind of scared of this document to actually taking control of the financial story it tells about you.
So where did this whole system even start? It didn't just pop up yesterday, did it?
Oh, definitely not. If you look back, the need for something like this, it evolved over time. The sources mentioned way back in the 1800s, figuring out if someone was, good for the money. It was mostly just reputation, word of mouth in the local community.
Like, oh yeah, Bill, he's solid. Lend him the cash.
Pretty much. But as things got bigger, businesses grew, transactions spread out, that personal approach just didn't scale. It wasn't consistent. So there was a need for a more standardized way to check risk. And that led to the first credit bureau, the retail credit company, which later became Equifax, founded way back in 1899.
1899. Wow. Okay, so this has been building for over a century. And I bet computers changed everything.
Oh, massively. When computers came into the picture in the 1960s, suddenly you could gather and report data much, much faster. The material points this out, but also kind of flags that those early systems, well, they weren't perfect. They had their own issues, biases, mistakes baked in.
Which, yeah, still feels like a conversation we're having today, unfortunately, but at least now we have regulations.
Yes, thankfully. The sources really highlight the Fair Credit Reporting Act, the FCRA. This is super important because it gives you specific rights. You have the right to actually see your report, the right to challenge stuff you think is wrong, and crucially, the right to know if information from your report was used against you, like in that denial scenario.
Those rights are so key, but here's a number from the material that just, wow, it stopped me. 1 in 5 Americans has an error on their credit report. And think about how many others just have absolutely no clue what's even in their report.
It's a stark statistic, isn't it? Really shows why, understanding your report isn't just a nice to do. It's almost like financial self-defense. The sources put it nicely. Yeah. It's about protecting your story from being miswritten.
Okay, so let's dig in properly. What is a credit report, fundamentally? Yeah. And what gives it this hidden power we mentioned?
At its core, it's a detailed history of how you've handled credit over time. It's put together by these big companies called credit reporting agencies, or CRAs. The main ones you hear about are Equifax, Experian, and TransUnion.
Right, the big three.
Yep. And the report itself, it's pretty comprehensive. It's got your personal details, name, address, that stuff. Then a list of all your credit accounts, like credit cards, mortgages, car loans, student loans. It shows the payment history for each of those who's looked at your credit recently. Those are inquiries and any public record stuff related to debt, like bankruptcies.
So it really is like your financial resume. Who's reading this resume then? Who uses it?
Well, a whole range of people in businesses, actually. Lenders, obviously, are the big ones. They use it to figure out the risk of lending you money. But landlords check it too, to see if you're likely to pay rent on time. Some employers use it, especially for jobs handling money or sensitive info. Even insurance companies might use it to help figure out your premiums.
Wow, okay. That's way broader than I think most people assume. And I guess having a good report, a strong resume, comes with real benefits.
Oh, absolutely. The sources are clear on this. A good credit history means you're much more likely to get lower interest rates on loans and cards, which saves you real money. Your chances of getting approved for loans or even renting an apartment go way up. And like we said, sometimes it can help with certain jobs.
So it's really true. Ignoring your credit report is like just letting your resume float around out there unchecked. It's telling a story whether you read it or not.
Precisely. And knowing what that story says is the first step, to making sure it's accurate and working in your favor.
Okay, let's get into the report itself. Because honestly, when you first crack one open, it can look like a different language. We need to break it down section by section.
Yeah, it can seem dense at first, but it's definitely decipherable. Let's start right at the top. Personal information.
That's simple enough, right? Name, birth date, addresses, social security number variations, maybe some employment history.
It seems simple, but errors here can be a big deal. The sources really stress checking this carefully. Look for misspelled names, wrong birth dates, addresses you've never lived at. An unfamiliar address, for example, could be a sign someone else's info got mixed with yours, a mixed file, or even identity theft.
Okay, so that's an immediate red flag right at the beginning. What about the main part, the actual accounts?
Right, that's the credit accounts section, sometimes called trade lines. Each trade line is basically one account, a credit card, a mortgage, whatever. It lists who the lender is, what type of account it is, when it was opened, maybe when it was closed, your credit limit or loan amount, the current balance, and the really important part, your payment history.
And that payment history usually has codes or symbols, yeah, like green checks for paying on time.
Exactly. And then maybe little marks or notes if a payment was late, like 30 days late, 60 days, 90 days plus. This history is huge because paying on time is like the #1 factor for good credit.
So the critical questions you need to ask yourself here are, is this actually my account? Are the balances right? Is the payment history shown accurately?
Yes, exactly. Mistakes right here can seriously pull down your whole report and any score based on it.
What about bigger issues like bankruptcies or maybe tax problems?
Those usually land in the public record section. This is where you'd find things like Chapter 7 or Chapter 13 bankruptcy filings. The material notes that civil judgments aren't reported as much anymore. And importantly, most big federal tax lines actually stopped being reported by the main bureaus back in 2018.
Well, that's good to know about the tax lands changing. But things like bankruptcies that are still listed there, they have a pretty heavy negative impact, don't they?
They really do. And they stick around on your report for quite a while, sometimes 7 or 10 years, depending on the type. So checking this section is vital.
Okay, let's switch gears slightly. Inquiries. You hear about those when you apply for stuff.
Right. Your report shows 2 kinds, hard inquiries and soft inquiries. A hard inquiry happens when you actually apply for credit, a mortgage, a car loan, a new credit card. The lender pulls your report to decide.
And having too many of those close together can kind of ding your score a little.
That's the potential issue the sources mention, yeah. It might make lenders think you're desperately seeking credit, which can look risky. Definitely scan this section for any hard pulls you don't recognize or didn't authorize.
And soft inquiries, what are those?
Those are different. They don't hurt your score. They happen when you check your own credit, or when companies check it for things like pre-approved offers they send in the mail. Totally harmless.
Got it. And sometimes the report itself might actually show a credit score.
It might, yeah. If the sources point out that the free reports you get don't always have a score, but some versions you might get elsewhere, maybe from your bank, could include a FICO score or a Vantage score. That score is basically calculated from all the data in your report, but the report itself usually just shows the data, not the secret sauce of how the score is calculated.
Okay, breaking it down like that really helps demystify it. Let's make it even more real. The material had some stories, right, about how errors actually affect people.
Yeah, they had a couple of good ones. There was Maria's story. She's a teacher, went to get a car loan, got denied unexpectedly. Why? Turned out there was a $400 medical bill on her report, marked as unpaid and sent to collections.
Yeah.
But it was just because her insurance hadn't processed the claim right. She didn't even know.
Wow, a $400 insurance mistake costs her a car loan. That's incredibly frustrating.
Right. It just shows how even small things you thought were sorted or didn't even know existed, can have these huge ripple effects. The lesson is, don't assume everything's okay in there.
And what about Sam the student?
Sam's story was about forgetting things. He had this tiny little store credit card back in college. Just forgot all about it. Years later, applying for something important, boom, an $89 charge-off from that old card shows up on his report. It highlights that old debts, even small ones, they don't just vanish. They can stick around for up to 7 years and pop up when you least expect it.
So those stories really bring home the red flags you need to watch for when you look at your own report. Accounts you never opened, payments marked late when they weren't, seeing the same debt listed twice, balances that look wrong, those hard inquiries you didn't authorize.
Being watchful, checking regularly, it's really your best defense against mistakes and, frankly, against identity theft, too.
Okay, so let's say you do find an error, and with that 1 in 5 chance, it's definitely possible. What's the actual process? How do you fix it? The sources lay out a pretty clear roadmap.
Yeah, they do. First, it kind of helps to know what type of error you might find. There are identity errors, wrong name, address, SSN, or maybe your info mixed with someone else's. Then account errors, maybe an account you closed is still showing as open, payments marked late incorrectly, wrong balance listed, and data management errors like seeing the same debt multiple times, or info that was fixed before suddenly reappearing.
Okay, so you've spotted the mistake on your report. First step.
Get your reports from all three bureaus, Equifax, Experian, TransUnion. The material reminds you, annualcreditreport.com is the official place for your free ones. And right now, you can actually get them weekly through 2025.
Good tip. Okay, step 2.
Pinpoint the error clearly. Maybe print the report, circle it, make notes, be specific about what's wrong.
And then gather your proof, evidence.
Absolutely vital. That's step 3. Find anything that backs up your claim. Receipts showing you paid, bank statements, maybe a copy of your driver's license if it's an identity mix-up. And remember the tip, send copies, never your originals.
Right. Step 4 is actually contacting the credit bureau itself.
Yep. Most bureaus have online dispute forms on their websites now, which is usually the quickest way. Or you can still mail a formal dispute letter. If you mail it, the sources strongly suggest using certified mail with a return receipt requested. That way you have proof they got it.
Okay, and then you wait. How long does the investigation usually take?
Under the law, the FCRA, they generally have about 30, maybe up to 45 days to investigate your dispute. You'll need to keep an eye out for their response and make sure you get written confirmation of what they found and if they fixed it.
And what if they come back and say, no, we think it's correct, but you know you're right and have the proof?
That's frustrating. But you do have another option. The sources mention you can escalate it by filing a complaint with the Consumer Financial Protection Bureau, the CFPB. They can sometimes help mediate.
Good to know there's an escalation path. But, using your report isn't just about fixing bad stuff. It's also a tool, right, for building a better financial picture proactively.
Totally. It's like getting regular checkups. Checking your report consistently, maybe you rotate, check Equifax now, Experian in 4 months, TransUnion 4 months after that, lets you track your progress.
And there are tools out there too, right? Like Credit Karma, Credit Sesame, or maybe monitoring services your bank offers.
Yeah, lots of those can help you keep an eye on things. Many offer alerts too, which are great. They might ping you if there's a big change, like a new account opened or a sudden balance jump, giving you a quick heads up. But beyond just watching, understanding the report shows you how to build that positive history, paying your bills on time. That shows up clearly in that payment history section we talked about. And the sources emphasize that's huge, often said to be around 35% of your credit scores calculation.
That's a massive piece. What else helps?
Keeping your credit utilization low. That's key. Basically, not using too much of your available credit limit on your cards. Trying to stay under 3% is a common guideline. It shows you're not, maxing everything out. Also, having a longer credit history generally helps, so think twice before closing really old credit cards if they aren't costing you anything. And having a mix of credit types, like some loans and some credit cards, can be seen positively too.
So the report really does show these habits over time. The material also mentions something called trended data. What's that about?
Yeah, that's becoming more important. The sources suggest that lenders are starting to look not just at a snapshot like your balance today, but at the trends. How have you managed your balances over the last year or two? Are they consistently going down? Are you making steady payments? Your report shows that pattern, that evolution over time.
So showing you're consistently paying on time, maybe lowering your debt, those kinds of positive trends are what lenders increasingly like to see.
Exactly. It paints a picture of responsibility over time, which is a really powerful signal for them.
Now, we've talked a lot about how to navigate this system, but the material also touches on criticisms, right? The system itself isn't perfect.
No, it definitely acknowledges flaws. They bring up the inaccuracy rates again, that 1 in 5 statistic is hard to ignore. There are also ongoing concerns about potential biases, how the system might unfairly affect certain communities more than others, and let's be honest, for most people, how those credit scores are actually calculated from the report data feels like a black box. It's not transparent.
Yeah, which makes it tough to know exactly what levers to pull sometimes.
Right. The sources also briefly touch on efforts to improve things like initiatives for better dispute handling. Some talk about maybe public credit registries for more transparency, or state laws limiting how reports can be used in hiring. Just being aware of these debates and limitations is part of understanding the whole picture,
This has been super insightful. Really feels like we've gone from the history through the nuts and bolts to practical steps people can take.
Yeah.
We've gotten a much better handle on this whole credit report thing.
Yeah, the big takeaway really is your credit report is like your financial fingerprint. It's unique, it matters, and you absolutely need it to accurately show your financial life.
So don't wait until you get that denial letter. The call to action seems really clear. Go to annualcreditreport.com, pull your reports, all three, and actually sit down and read them.
Understanding what's there, managing it, fixing errors. It's not just about dodging problems. It's really a fundamental part of building a stronger, more secure financial foundation for yourself.
It really is a powerful tool once you get past the intimidation factor. And maybe, as you look at your own report now, here's something to chew on. If the report is all the raw data, how exactly does that get crunched into that single credit score number? What's the actual math or logic behind the FICO or Vantage score that turns all those details into one grade? Maybe digging into that connection is the next step in your learning journey.